Yo, 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 yo. It's your boy MineDialogue back once again, sharing info for you to comprehend. And before you know it, you will start to ascend. So I wanted to connect with y'all again, dialoguers, just because the video I made prior to this, or the video I made prior to video number 7, which is the gold analysis update, and like a second video where I include Bitcoin. I don't know, it didn't properly save, and so I essentially lost the video, and it was some very key things that I wanted to discuss that connected to video number 7, and unfortunately I lost that. So I'm going to try and fuse together the synopsis of what was in that video along with this current video that I'm doing right now, and hopefully it'll help tie things together. But I just wanted to give some updates on how gold performed today based on some of our previous discussions, and give an update on the trade with Bitcoin the paper trade with Bitcoin that I took, and what's currently happening with that. So let's get right into it. I'm gonna take off this Fib tool, or Fibonacci retracement tool, and so I just want to bring a couple things to your attention. We're gonna go on the 4-hour time frame, stretch this chart out just a little bit. If from what I remember, I believe the video before video number 7, which may be 5 at this point, I started talking about this bull flag that I saw on the 4-hour. The wedge and flag finder indicator that I have did not pick this up, but when you've been looking at the charts for so long now, and you're doing a bunch of tape reading, you kind of start just seeing the patterns that form relatively quickly. And so this bull flag right here, I definitely saw forming. And so let me take off some of this real quick so we can clean this up slightly. So I saw this bull flag in my eyes form, and essentially, let me take it off now so you can visually see the flag. That's the blue outline right there. I'm going to take that off. And so this, what they call in trading, this falling wedge, or I call essentially a channel that price action is behaving inside of, creates the flag portion of the bull flag. And then we came and got support basically at the top tip of the flag. We broke up above the channel, got support at hold on one second, y'all. Hold on. My bad, y'all. Got distracted by my baby again. It's all good though. So yeah, as I was saying, we came down into this channel, right? So basically what I suspect happened is, I feel like market makers or institutions are essentially the entities with a lot of darn money. I feel like they came into the market off of this candle, which was at 10. What is this? It looks like, I can't really tell. Let me see. It looks like 10 a.m. Yeah, I believe it's at 10 a.m. if I'm not mistaken. Yeah. Well, it started at 10 a.m. because I'm on the 4-hour right now. Yeah, so it started at 10 a.m. on the 16th of July, or on a Wednesday. And so I feel like they came into the market off of this because it was a very aggressive buy up, or it was a bunch of buy orders. And you can see we have a green candle, which represents the bulk of the trading that took place was mostly buys, or the majority landed on buys. And it stands up this way all the way down to, let's see here, from the 4 hour down to like the hour, it holds up, right? Until I get to the 45 minute, it turns into a majority sell candle or red candle where the majority of investors and traders were sellers, right? But as I indicated before, because the larger time frames, right, reign supreme, I believe that the 4 hour to 1 hour was the true narrative of what really happened. And so they did an aggressive buy up, but then sold it down real quick, which then pushed the market down on gold back to that very significant trend line, freed up a lot of supply. That way they were able to come back around and buy up that supply and bring others along with them to then push us up to where we are now. We broke up outside of the channel, came back down, got support on this beautiful bullish fair value gap, and then that allowed us to push past this trend line here. We took out the highs of when they came in, and now we're currently sitting up here on the 4 hour. Now I want to bring just something else to your attention. Now, I'm not sure if I discussed this on the video that did not save properly, but I wanted to tell you, if you remember this purple looking line, which is really a volume imbalance. You see, as I stretch the charts out, this is an actual area or volume imbalance where orders, let me say that again. It's a bearish volume imbalance, meaning that in the past, when I detected this or the area that it started at, when they were selling, they were going so fast that it left a gap in from 4 hour to the next 4 hours, I believe is what I detected. Now, let's take a look at it real quick so you can see. So yeah, right here. So from 10, that looks like 10, hold on. That looks like, I think it's 10 a.m. if I'm not mistaken, on Monday until, let's go on a lower time frame so I could see it better, because the 4 hours can be a little deceiving in terms of like the actual time. All right, here we go. So on that hourly, it looks like, I believe that, yeah, this, it looks like, I believe this is during market. Let me just make sure, y'all. I don't want to give you misleading information. So yeah, it looks like, hold on 1 second. Where are we at right now? My bad, y'all. I just need to make sure before. Okay, so the blue area is essentially aftermarket, or starting at 6 p.m. All right, cool. So it looks like then this volume imbalance essentially took place from 1 a.m. to 2 a.m. on the Tuesday morning, which is the 17th of June. So it goes back over a month ago, right? Shows up, and I was like, you know, when the chart is at regular scale, right, it looks like just a really thick purple line. And so that grabbed my attention because it also showed up at a very key area, which is like the bottom of I believe like a bigger bullish volume imbalance, bullish fair value gap, if I'm not mistaken. But whenever I did whatever measure I did, I feel like I saw like a discount or a level 2 up here somewhere, and then I just went looking in the price action in the charts to see if something of significance, such as a volume imbalance or fair value gap, showed up, and this is what ended up showing up. So automatically I was like, you know what, this is a point of interest for me. This is where I would take shorts, right? or at minimum, I knew that this would be the profit taking area because there would be some type of reprieve or refuel or reversal taking place. And that's exactly what happened here. So let me take off this red line. Let me take this one off. So as you can see, it didn't move much from when it did that, right? It's kind of still in the same place, almost kind of doing a consolidation right now. But as you can see, they closed above that volume imbalance, right? Made a high, then closed right here. And then the next candle swept it, and then we began that reversal. But then they came back up, and they've wicked. And I found another volume balance. I went on a lower time frame and saw that there was another volume imbalance because I didn't think we should continue up. And I was like, they're trying to play games as they come back up, and I want to see how they treat this volume balance up top here. I think I might have found it on a 30-minute, if I'm not mistaken. Let's go down here. Yep. So what's crazy about this, right? This was, I'm gonna make this a little, I'm gonna not make it a stick here. And what's crazy about this now this is a bullish volume imbalance, and they're essentially treating it as an inversion volume imbalance, meaning typically just like a bullish fair value gap, price should be going down into it, bouncing off of it, and using it as fuel to balance out or rebalance to continue up. But the key thing to remember or keep in mind is it's at the end of this move. So because it's at the end of this move, they're probably going to manipulate around it and then use it as resistance. And that's what they're currently doing. They manipulated up above it again. Look, they closed above it. They swept it even better here. Swept the body of these previous candles, and then you got a nice rejection right there. Right? So, and then currently they're wicking off of that initial bearish volume imbalance we talked about. And then you got like this M looking pattern right here. It could possibly be setting up for a W pattern to go higher. I'm just not sure if they're gonna do that just yet, because again, I think they want to go up here to this trend line up top where all-time highs was created off of, or the trend line was created off of the all-time highs and then a previous lower high. I really think they want to get up top there, especially because we've broken some key levels down here and key trend lines and all that stuff. So that's what I'm looking at right now. And let's see here. So we got a lower high here, right? So we got two reference points here. So we can create, let's do a trend line here. It's a little more subtle, right? It's not as steep in terms of a trend line, but it's a trend line nonetheless that's created off of a swing high here and then a lower high or another swing high over here that's lower than this, right? So that gives us our reference point. And so right now we have a bearish fair value gap that's created right here. So they may potentially want to dig up into that some more. This is the 30-minute. Let's go on a higher time frame. You know, I always like to, at least these days, the way in which I do my analysis, I always like to reference the higher time frames, because if there's something key that's shown up on a higher time frame, that means it's most likely going to be a target, and they're just going to use the lower time frames to manipulate to that higher time frame and do whatever it wants to do. So right now, because of this trend line, the way that I would traditionally assess this is, you know, we got our reference points, right? We got our first reference points here off of a swing high, and then we got another swing high here. Got your trend line. They manipulated above this and this two times, both bearish and bullish volume imbalance. So now they're looking to balance out finally. So now I'm trying to determine, do they want to go back up and balance out inside of this bearish fair value gap, or is them wicking into this initial point of interest, bearish volume imbalance, enough for us to come down? And right now they're creating the spin top like doji, about 3 minutes left on the 30-minute. So I'm gonna go up on, well, before I go up on a higher time frame, I want to go ahead and measure this and see if we've balanced out at a key level on the Fibonacci. And so if you remember, or to reiterate what I illustrated for you in the past, is I'm now using the Fibonacci tool, the Fibonacci retracement tool, to measure in a way that will help me to see if we truly want to go down or not, or if we're trying to go back up to rebalance before coming down lower, right? So I started the measurement from the top, or the highest swing high, right? Which is the most significant swing high in this fractal sequence right here, right? You know, you got this high, you got this swing down here, and you got this swing up here. So in this little fractal sequence, I want to measure from the highest point down to the lowest point. And the level that's most important to me is where I have this black horizontal line striking through, which is the 62% or 0.612 level, which is 3412.5. Because at this point, I want to see if price has come up to reject off of this properly. Because if we truly want to go down, we should not go above and breach this level on like a higher time frame. So in real time, folks, we can be able to draw our Fibonacci, or measure using our Fibonacci once we have, hold on one second, let me take off this extended right, and then we're gonna make this a different color. Let's make it yellow. We can keep the purple border. So in real time, once we see this right here, this is enough for us to have a measurement of significance. So we're looking at this fractal area right here, and we got a significant swing high and a swing low from which we can measure from. And so since it's done all of these things here, right, it essentially made this M pattern to where it's going down, we're able to measure. This ended up being the highest point, which is helpful because that means our measurement can hold. And so look what slick things they did, right? So on the 30-minute, right? So remember I said the 62% level, when price is under this level, or even the 50 or 38, but ultimately the 62%. When price is under this level, price should not break and hold above this level in a significant way or on a higher time frame, because that would nullify us wanting to go down, right? It would shift the bias back going up. It would shift the bias going to the upside again. Okay. So right now, as you can see, price recently wicked into the 50%, right? First, we manipulated above the 62% to trap buyers, right? Because if you, let's say you entered off of this breach going up, or you waited for this candle to close and you entered, and you did not get out here at this move, which for individuals or institutions with a lot of capital, you could do a high frequency trade and make a lot of money and be in and out. But for the average Joe Smo trader / investor, if you didn't get out here, particularly for traders, because traders, there's a key difference between trading and investing, right? Well, trading means the actual is like the operative word for getting into a position and getting out. So you can trade when you invest because you can make a trade to enter that investment and then trade to get out of that investment, right? But trading is for more shorter term time frames, right? If you're really investing, you're trying to hold for, at least a year's time if you're, if it's a worthwhile investment. Now, that doesn't say that you can't make a lot of money investing in a shorter period of time. Even I have. But if you want the real run up and real money, and you're in a quality company where a lot of the check boxes are met, you're going to be holding for more than a year, right? So for a trader entering once this closed above the 62, that was a trap, right? Because they closed, you got 1, 2, 3 closes. So essentially they operated a good hour above that level, and then guess what happened after that? They swept highs and then they tanked it. If we go up to, let's see what things look now again. So they manipulated above the 62%, because that's the level that's supposed to be holding us down. But we're on a 30-minute time frame. So as we go on higher time frames, we'll be able to clearly see the manipulation. On a 30 minutes, it would be too difficult to try to figure it out, because you got a whole hour, even more than that, of us operating above that 62% level. So we need a higher time frame to give us a clearer picture. And then as of recent, we wicked into the 50% and got sold out again, and we're currently coming down right now to hit the initial starting point of where we ended our measurement. Because remember, we started at the top, measured down, you got levels that retraced in the opposite direction, but there's a specific reason as to why we measured from top to bottom. Is because we want to see how price action is going to behave. When it's under here, we want to see how it behaves on these levels. All right, so let's go up to, let's say, the 45-minute, much clearer. This is the type of entry we want to strive for. Now, it's one of the scariest types of entries, because not only is it going in the opposite direction of where you're trying to go, right? But in real time, it looks like we're going to be moving, right? So let's take this off here. Now, these two candles here, grab my attention because they were full body candles at once and got sold down really aggressively. So let's see how they look as we go on the higher time frames. Now, the 62% is becoming clear, but you still got 2 closures above here. So we need to go a little higher. Let's see what happens on the hour. Woo! Wow. The hour plays out perfectly in what we want to see, because the hour closes above the 62%, right? They make this high, closes here. The next hour opens, sweeps the high, creates that second reference point for the trend line, and then sells it down. That's the type of entry you want to see right here, right? So you got to be a brave soul to enter this as it sweeps, comes back down, makes that low, and then closes here inside, essentially inside of that bearish volume imbalance. Then they open up a little bit higher, barely push up and sell out again. It gets sent down. So after you enter, so you can enter this like once this high gets swept, that could be your entry. Or if you want a little bit more confirmation, you can wait till we get below the bullish volume imbalance, or even close below the 62% and the 50% and the bullish volume imbalance. But one of your most optimal entries is going to be once this gets swept here. Okay, so the hour shows beautifully here, and it looks like on the hour this is a sell down candle. So we're currently breaching that zero endpoint to potentially come back down. So we're going to see how this is going to be key here. If we close, let's see what happens here. So this is at the beginning of a bullish volume imbalance right here. Let's tag this out so you can see what I'm talking about. This is at the beginning of a bullish volume imbalance. So let's see how this plays out. They might try to close below here and then turn around, push back up. Now on this hourly, there's some bullish volume imbalances in here, but there's no like bearish fair value gaps or anything that I see right now. Let's see if there's anything, not on the 3 hour. Again, bullish volume imbalances in here that they might try to like rebalance right above the 38%. Nothing shown for the 4. So let's see here. All right, let's see what the hour and a half looks like. All right. So this would be a trade that I would take going down. We're probably going to aim to come back down here. So let's see what happens here. Let's see how much time we got. 5 minutes. All right. So let's do some measurement here to see what might be going on. This is the 90-minute right now. So I'm going to do a measurement because I want to see. Let's see. We got this swing low right here that's in alignment with the top of this trend line. We measure up to the swing high. We got the 38% that's at the start of a bigger bullish volume imbalance. Let's see what's the 4 hours looking like. So this is a huge bullish volume imbalance. I mean, fair value gap right here. So they can sweep and take this heavy. Let's see what we're trying to do here. I want to see if I could frame this out. So it looks like we got a channel right here, but it gets broken. Let's see if the 30-minute does anything for us. All right, so we're gonna make another video of this, but for right now, this is what we're gonna do. Let's see if this does anything for us. Okay, so I think I have an idea of where we're trying to go based off of this trend line. So this is what I'm gonna do here. I think I'm gonna get ready to take an entry, but I don't feel like we want to fully go just yet. So I don't want to be just greedy and just jump into anything I see. I would love to see this get rebalanced. So I'm gonna see if I can catch a trend line in the middle of here real quick off of these two swing highs off the inside of here. Boom. And then let's see, that's pretty low. That's pretty high. Let's see if I can catch something a little bit better. All right, we're gonna see if we can catch an order right here. I want to see if we can catch one right here. So we're gonna sell one here, and then we are going to take profit, I would say about here, and then we're gonna do a stop loss up here. Very high probability. Well, not high probability, but there is a possibility they can go crazy because this is a pretty obvious like move. So I've seen before where they can go up, sweep all of this, get the stops up here of me and other people, and then reverse back down to come where we need to be. So they can do that, but I like this. This is like basically it's like a 1 to 4 right there. This is like a 1 to 4. I really like that risk to reward. I'm gonna go ahead and measure this out, see what we got here. We got the discount there, we got the 2 there. I should take it higher. This is like a 1 to over like a 1 to 2. We're gonna take it there first and see what happens. We'll see what happens. Well, we're gonna stop there, folks. I'll make another video. You know what? No, we're gonna stick to we're gonna take it down here to this 3 level right here. I like this 3 level. We're gonna do that. There's a lot of liquidity sitting below here, and this is a nice. So this is almost a 1 to 4. We got a nice setup here. So let's see what happens, folks. All right. We will be back next time. I'll go a little bit more into Bitcoin, and I'll let you know what happened with Bitcoin. Love.